More great news today for Tesla stock investors as a Bank of America analyst upgrades the price target on Tesla stock. I'll go over that price target upgrade and what it could mean for Tesla stock investors, which seemingly keep getting more good news day after day ever since the election results in early November. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Tesla stock is popping today on bullish comments from Bank of America Securities, with the firm analyst fresh off a visit to the Giga Austin factory. The analyst saying that the trip gave them more confidence that Tesla is well positioned to grow in 2025. Plus, with its core EV business and launch of its robo-taxi offering, and longer term from its investments in Optimus, John Murphy wrote in a note to investors. Murphy also reiterated the buy rating on Tesla stock and increased the price target to $400 per share, up from $350 per share, thus sending Tesla stock 3% higher on the back of that news. In fact, Tesla stock is now trading at $370 per share, up 3.3% on the back of this news. So the analyst from Bank of America rightly claims the first biggest driver for Tesla is the prospect of an upcoming low-cost electric vehicle. This is an actual real product that's expecting to come out, which Tesla said is coming in the first half of 2025. Now, they believe that this product will be priced at less than $30,000. Now, I would be surprised if it will be priced at less than $30,000 and still generate a positive profit margin for Tesla. The reason I say that is because whenever Tesla management in recent quarters has been asked about, they've been talking about a $25,000 model for, 5-6 years now. And then now that it's time to actually launch that $25,000 model, they've been deflecting questions on that model. They've been saying things like, well, you don't really understand our business if you're asking us about a lower priced car, because that's not what's important to our business longer term. You should be asking us about our driverless car technology, because that's what's going to drive our valuation up to several $trillion more, and or ask us about the Optimus robot, which is also going to add trillions of dollars to our bottom line. So because of the way Tesla's management has been avoiding questions about the lower priced model, I've kind of lowered the probability that it will be anywhere near $25,000. And what this analyst is saying is they believe it's going to be under $30,000, which would be really close to $25,000. And given the rising inflationary pressure over these last 6 or 7 years, that would be a remarkable achievement. That would be basically hitting $25,000 price point on an inflation adjusted basis. So it would be Tesla actually hitting a target that they set out for themselves, which is rare for Tesla, right? Usually they make these predictions of things that they're going to do, and it doesn't pan out anywhere near what they were predicting. But because their predictions were like way, way up here, and they end up hitting like way down here, it's still much better than any of their competitors, right? Tesla is by far the best electric vehicle company in terms of revenue, in terms of profits, in terms of cash flow, in terms of margins, all of which Tesla's best in class. So a model at less than $30,000 would be extremely bullish, especially if they can produce this model at a positive gross margin, which would be very difficult to achieve given the higher cost of production, given all of the headwinds Tesla faces. And then on top of that, if they can get that $30,000 out to the market, and some percentage of those people that buy that car are going to end up adding the supervised self-driving to their purchase. And that's the real margin product there, is that supervised self-driving. That's a very high margin product, and Tesla hopes to generate more people purchasing that product. Even if they don't get the robo-taxi out, right? Again, this highlights management strategy, right? They're, shooting for, robo-taxis, millions of robo-taxis on the road, right? Which is a target, like way, way difficult target. But even if they don't hit that target, but they end up selling um, supervised self-driving to 25 to 50% of the people that buy Tesla cars, and selling it at a price of roughly $100 a month, or a few $1,000s up front if you want to buy that. That's a very high margin product that's going to generate hundreds of millions, if not billions, in revenue and profit for Tesla. So even if they aim for something way up here and they hit something like a little bit a lot lower than that, it's still going to be so much better than any of the competitors, and it's still going to generate billions in revenue and profitability. So this has been a strategy that's worked for Tesla. It motivates employees because they feel like they're going for something really big. And even if they can't achieve that really big target, they still achieve something that's much better than any of the rivals. And so this model here, the $30,000 model, would be huge in the first half of next year. So this analyst was also bullish because they took a ride in the Cybertruck and the Model Y using supervised self-driving, and the car performed really well. And so they're bullish on how effective the supervised self-driving is in Tesla vehicles. And so they're bullish on the prospects of that. Again, even if it doesn't develop into the full robo-taxi where you're going to have millions of these driving themselves on the roads, even if it doesn't develop into that, even if it just develops into a product that 25 to 50% of Tesla owners add on to their purchase of Tesla cars, that's going to drive a huge boost in Tesla's revenue and profitability, because that's just going to be incremental margin, right? They've already made the investments in the software to offer this technology. And so each incremental purchase adds a significant sum to the bottom line. So Tesla's stock price is soaring, but so is the valuation now. I have here Tesla's forward price to earnings value is 113. It's about the highest it's ever been, going all the way back to January of 2022. But remember, in January of 2022, Tesla's revenue growth rates were over 60% with much higher profit margins. But right now it's trading at a similar valuation to January of 2022, when the growth rate is a fraction of where it was, maybe 10% of where it was. So a lot of the valuation right now is incorporating all of those positive prospects in the future. So I don't share this enthusiasm for Tesla stock as this Bank of America analyst shares, although I do agree that the company is delivering innovative products. The lower priced EV is going to be huge for the company's growth prospects, adding more customers at a more affordable price point, driving competitors out of business. That's going to be a huge positive for Tesla. And the supervised self-driving, those are very positive to the company's profit margins. All of that, I think, is offset by the incredibly high valuation of 113. So that's why I don't share the positive sentiments, is just because of the valuation. I agree the company is an excellent company, way ahead of the competitors, and it will continue to do very well in this industry, regardless if the industry is booming or if the industry is declining. Tesla will do well against the competition. I just think that all of those prospects are already more than accounted for in the valuation. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.